Hey, it's Frank. It's time for a quick check on the week ahead. What's going on in markets and economic data for the week. Remember, great sources for this information, investing.com, economic calendar, and I like cnbc.com as great sources. Let's start real quick with markets. I put out a quick video on Friday, late morning, little market update for last week. Let's see what we have for the week ahead here. Checking on stocks, equities. I'm a seller of rallies in stocks. I remain that way. The S&P 500 will open the week at 4,405. Looking for technical levels above resistance, 4,500, and below support, 4,327. Good range for you. I'm a seller of rallies and bond prices, and I want to remind you, of course, there's inverse relationship between bond prices and interest rates. As bond prices rise, interest rates fall. As bond prices fall, interest rates rise. Checking on the 10-year U.S. Treasury bond. So we opened the 10-year at 5-year highs, 4.23%. Watch for the breakout to the upside here. Look at 4.58% above for resistance, and below we have support at 3.87%. Check on oil, WTI, NYMEX, West Texas Intermediate. I'm a buyer of dips on oil. Open the week at $80.30. We're right at a big level here, 80.31. Look for a breakout. Play resistance levels to the upside, 83.76 and then 85.05, and then below we can look for support at 73.77. I'm a buyer of dips in the US dollar. Check on the US dollar index as a proxy, a basket of currencies against the US dollar. Open the week at 104.17. Technical levels to watch to the upside, resistance 105.27 and below for support at 102.87. Now let's check out for data for the week. No data on Monday. Tuesday, you can see here on the screen, we have the Conference Board August Consumer Confidence, 113.4 is what we're looking for versus 117 in July. As you can see in the chart, recovering the past few months, but still below December 2019 highs. On Wednesday, as always, 7 a.m., MBA mortgage applications for the week ending August 25th, down 4.2% in the prior week. Probably looking for a negative number here as well. Also on Wednesday, the August ADP non-farm employment change, big number here. If ADP is out on Wednesday, that means non-farms is out on Friday. Employment situation report on Friday, the mother of all data points. We're looking for 195,000 from ADP against 324,000 in July. As you can see, total employment continues to rise. We've added about 5 million jobs since December of 2019. Also on Wednesday, we get our second look at second quarter GDP, gross domestic product. This is the preliminary look. Looking for 2.4% compared to the 2% that was released in July. You notice in the chart here a slight downward trend for GDP, real GDP, bumping along at low growth rates. Talking about recession, and we're close. You can see there we had a little recession in early 2022. What also comes out with this data is the GDP price index. Personal consumption expenditures, the favorite index of the Federal Reserve. Again, our second look, we're looking for 2.2% versus 4.1% in the advanced July number. That's a big change. I'm surprised to see that. You can see the trend in the chart that we're improving when it comes to inflationary pressures, but we remain well elevated above the 2019 levels. Inflation is still a problem. Remember, this is inflation, not a fall in the price index. That's a whole other discussion. Also on Wednesday, we have the July goods trade balance looking for minus 89.9 billion trade deficit versus minus 88.83 billion trade deficit in June. Note this is goods only. You can see in the chart some improvement, but that's a horrible chart. Just keep on sending money overseas, primarily to China. Still bad news. Trending to another $1 trillion deficit on the trade front for 2023. Massive number. And lastly, on Wednesday, July pending home sales down 0.1% is what we're looking for versus up 0.3% in June. Pending home sale, homes in contract waiting to go to closing. On Thursday, as always, 8:30 a.m., initial unemployment claims for the week ending August 26th, looking for 235,000 versus 230,000 in the prior week. Still low levels. You can see on the chart rising slightly. Corporate and small business America is lean. Also on Thursday, August, Chicago Purchasing Managers Index, looking for 42.8 against 43 still in contractionary mode. As you can see in the chart here, 11 months now in a row and well below the December 2019 levels. On Friday, the mother of all data reports, the employment situation report for the month of July. How's the U.S. labor market? Non-farm payroll increase, looking for 170,000 versus 187,000 in June. You can see in the graph here, we're still adding jobs, but a little downward trend near recessionary levels. Something is amiss in the labor market data. Claims, non-farm payroll data, ADP report, something isn't right. We haven't seen it yet, but something's a little fugazi in the data. Also on Friday, the rest of the employment situation report, we get the U3 unemployment rate, 3.5% against 3.5% in June. The U6 rate, our broadest measure, 6.8% versus 6.7% in June. Average hourly earnings, we're expecting 0.3% versus 0.4% in June, still inflationary. And average hours worked, 34.4 hours versus 34.3 hours in June. A couple more data points for Friday. We have July construction spending out. You can see here on the chart, construction spending has been falling for some time, another recessionary indicator. For the month of July, looking down 0.1% compared to up 0.5% in June. Again, we're back below December 2019 levels. And then lastly, for data for the week on Friday, August Institute for Supply Management Manufacturing Index. What's the health of the manufacturing world out there? 46.6 is what expected versus 47.3 in July. A weak number, still below 50, so contractionary. Not good. All right, that gives you a little insight into markets, what technical levels to watch out for, and what data to look for the week. Quick note, there's hundreds of data points that come out a week. I'm tracking 30 to 34 data points that are the real market, the core of what we want to see when it comes to evaluating the performance of the U.S. economy. All right, that's all I have. I'm Frank. Always try to buy American.